All right, everyone, welcome back. We're diving into something really interesting today. Um, PepsiCo stock.
PP.
PP,
Yeah.
exactly. And we've got this awesome financial report,
Yeah.
plus some recent news, and we really want to break it all down and figure out with you guys.
Mm.
Is this a buy, a sell, or a hold?
Yeah, and I think what's so interesting about PepsiCo is that there's so much more than just Pepsi, right?
Yeah,
They have such a diverse portfolio of brands.
that's true. That's true. It's not just soda, right?
Oh,
We're talking Frito-Lay,
Quaker,
Quaker Oats.
Tropicana Gatorade.
It's massive.
It's huge. It's a global empire of snacks and beverages.
It really is. And I think that's what makes this so fascinating to look at. It's like, why is that good for an investor to consider?
Well, that diverse portfolio really acts as a safety net.
Okay.
So if soda sales are slowing down, their snack division can kind of pick up the slack
Right.
and lead to more stable earnings overall.
Got it.
So it makes them less vulnerable to like those market fluctuations.
That makes a lot of sense. And actually, the report highlights their international performance is really strong, especially in those emerging markets.
Right.
So that's pretty exciting when you think about it in terms of like long-term growth potential.
Absolutely. But it's not all smooth sailing.
Okay.
The report also mentions this FTC lawsuit
Oh.
alleging unfair pricing practices with Walmart.
Okay.
And this is something investors need to pay attention to.
So let's unpack that a little bit.
Sure.
What are the potential implications here?
So basically, the FTC is alleging that PepsiCo was giving Walmart preferential pricing, which could be seen as anti-competitive.
Okay.
So this could lead to some hefty fines
Okay.
and even impact their relationship with one of their biggest retail partners.
Oh, and that's a big deal.
Yeah, and this kind of feeds into this larger trend of increased regulatory scrutiny of the food industry in general.
Oh, so it's not just the immediate, like, financial hit,
Right.
but also, like, the long-term.
Yeah, reputational risk.
Reputational risk, and then maybe even more regulation coming down the line.
Absolutely.
That's a lot to think about in terms of profitability.
Exactly. And this is kind of where those like bullish and bearish analyst opinions come into play.
Okay.
Some analysts are kind of downplaying the lawsuit a bit, believing that PepsiCo is going to weather the storm.
Yeah.
They're really focusing on the company's strong fundamentals, that brand portfolio, a global reach, and their history of innovation.
So they think those positives outweigh the legal challenge.
Exactly.
Got
But
it.
then other analysts are more cautious, right?
Okay.
And they're highlighting this lawsuit as like a red flag.
Right.
They're really concerned about those legal costs, the potential damage to PepsiCo's reputation, and just the uncertainty surrounding like the outcome of the case.
Sure. I mean, it makes sense because nobody really knows what's going to happen with that.
Right.
It's kind of fascinating, though, how the same information can be interpreted in different ways.
That's the beauty of stock analysis, isn't it?
Yeah.
We're not just looking at numbers. We're trying to predict the future.
That is a really good point. And speaking of the future, let's talk about Frito-Lay.
Okay.
Because their sales have slowed down recently,
Yeah.
which is concerning because they're a pretty big part of PepsiCo's business.
Huge, right? Frito-Lay is a powerhouse, but, they're facing some headwinds.
What kind of headwinds?
Well, those changing consumer preferences
Right.
are impacting snack sales.
Yeah.
People are becoming more health conscious.
I mean, for sure. So how is PepsiCo addressing this then?
Well, they're investing heavily in innovation.
Well,
They're developing new products that kind of cater to these changing preferences, like
Yeah.
baked snacks and veggie chips.
interesting.
They're also expanding their away-from-home market.
Away from home, what does that even mean?
So basically, it's like capturing those snacking moments that happen outside of the traditional, like, grocery store setting.
I see.
So think like vending machines, stadiums, airports, concerts.
Places where you're on the go
Yeah.
and you just grab a quick snack.
Right.
So they're trying to be present wherever people are snacking,
Right.
not just on those grocery store shelves.
Smart. But I imagine those new product lines and, expanding to these new markets, it takes time to generate those returns, right?
Absolutely.
It's a bit of a risk.
For sure. It's a calculated risk, and it remains to be seen, how successful these strategies will be in the long run.
So it sounds like we've got a lot to consider here.
Yeah.
We've got PepsiCo with this strong global presence and diverse brand portfolio. But then we've got the FTC lawsuit and Frito-Lay's challenges.
Right.
It's a complex picture.
It is.
And I feel like we're only scratching the surface.
Exactly, and that's why we encourage you to do your own research and really dig into these issues before making any investment decisions.
Great advice. So as our listeners are kind of going and doing their research, What are some key areas that they should investigate further?
I think it's crucial to dive deeper into that FTC
Right.
lawsuit.
Look at legal precedents in similar cases, understand the potential financial impact, and kind of assess those long-term reputational risks for PepsiCo.
That's great advice.
Right.
And I think beyond the lawsuit, it's also worth looking at PepsiCo's track record with innovation.
Yeah.
How successful have they been in the past adapting to these changing consumer preferences?
Right.
Can they repeat that success with these new health-focused products?
Absolutely. And don't forget to factor in that international growth potential.
Oh, yeah.
Look at the specific regions where they're performing well and consider the economic and political factors that could impact their future growth.
Yeah, these are all such great points to keep in mind as you are evaluating PepsiCo stock.
Mm,
But, remember, this deep dive is just a starting point.
right.
It's up to you to do your own research,
Yeah,
make informed decisions.
absolutely. And if you're enjoying this analysis, be
Yes.
sure to hit that subscribe button and ring the bell icon so you don't miss out on our future deep dives into the world of finance.
Yes, we have tons more to explore together.
We do.
We'll be back in a moment to delve deeper into the financial data behind PepsiCo.
All right.
Stay tuned.
Okay, so let's actually look at some of these numbers
Okay.
from the financial report.
Yeah.
One thing that really jumped out at me was PepsiCo's operating margin.
Okay, now for those of us who are not financial wizards, remind me what operating margin tells us.
Sure. So operating margin essentially shows us how much profit a company makes for every dollar of sales
Okay,
after accounting for all those costs, like manufacturing and marketing.
got it.
So, like, a higher operating margin generally indicates greater efficiency and profitability.
Okay, so what's the story with PepsiCo's operating margin then?
So it's been hovering around 16%
Okay.
in recent quarters,
Okay.
which is actually pretty healthy for a company in the consumer goods sector,
Okay.
but it is slightly lower than some of their competitors.
Is that a cause for concern?
It's something to keep an eye on, for sure.
Okay.
It could suggest that PepsiCo is facing some pressure on their pricing power, perhaps due to increased competition or rising input costs.
That makes sense.
Yeah.
What other financial metrics should we be paying attention to?
Well, debt levels are always important to consider.
Okay.
PepsiCo has a fair amount of debt,
Okay.
which isn't necessarily a bad thing in itself.
Right.
Companies often use debt to finance growth and expansion.
So it's more about how they're managing that debt.
Exactly. We need to look at like their debt to equity ratio,
Okay.
which basically measures the proportion of debt financing relative to equity financing.
Got it.
And a high debt to equity ratio can signal higher financial risk.
And where does PepsiCo stand with that ratio?
So currently it's around 2.5,
Okay.
which is on the higher end for their industry.
Yeah.
Again, this isn't necessarily alarming, but it's something to factor into your overall assessment.
Okay, so taking all this into account, right?
Yeah.
We've got that decent operating margin, but we've got the higher debt to equity ratio. We've got the FTC lawsuit kind of looming over everything.
Yeah.
What's your expert take on PepsiCo's financial health?
Well, it's a mixed bag, to be honest. They definitely have some strong points like that diverse portfolio and their international growth,
Right.
but they also have some areas of concern.
Yeah.
I think, their ability to manage those challenges and maintain profitability will be key in determining their future success.
Yeah. I mean, that's a smart and cautious approach.
Yeah,
It's easy to get caught up in the hype, but it's important to look at the full picture.
absolutely. And that's why we encourage you to dive into those financial statements yourself.
Yes.
Don't just rely on headlines or analyst opinions. Get your hands dirty with the data
I love
and form your own conclusions.
Get your hands dirty. I love that. It's so empowering when you can understand those financial statements.
Right.
And really make your own decisions about your investments.
Exactly. And we're here to help you through that process.
Awesome.
So be sure to subscribe to our channel and hit that notification bell
Yes.
so you don't miss out on future deep dives into the world of finance.